Hi, everyone. Thank you for joining us today. I'm Aatif Awan, your host. I'm the founder of Indus Valley Capital, a Pakistan-focused fund. And I'm super excited about today's session because we have a very special guest here, Ansaf Kareem, who's a partner at Lightspeed Venture Partners. Lightspeed is one of the iconic VC firms out of Silicon Valley, but truly global in nature. I've invested in more than 400 firms, including Snap, App Dynamics, Carta, many incredible companies. So welcome, Ansaf. It's great to have you here.
Thanks, Aatif. Thanks so much. And thanks, Pak Launch and Ali for hosting us.
So Ansaf, tell us a bit more about Lightspeed. I just briefly mentioned it, but tell us what's special about Lightspeed and how it approaches global investing.
Yeah. So we've been around for almost 2 decades now. It started right after sort of the first dot-com boom, and the first focus of the firm when the founder started it was very much early stage investing at the enterprise level. So think about the building blocks of the early internet. The company was investing in a lot of those companies: Riverbed, Informatica, Nicira, storage companies. And I'd say over the last 10 years or so, have really morphed into a multi-stage and multi-sector firm. And what that means is that rather than just doing early stage, now we do everything from $3 million seed checks to a pre-IPO investment right before a company might go public, and everything in between. And then we've also morphed that into a multi-stage opportunity. So rather than just focusing on enterprise infrastructure or some of those more hardware-focused investments, now doing everything from social mobile gaming companies to enterprise SaaS, to continuing to do enterprise infrastructure, and then also new areas like digital health, Web3, you name it, we'll probably take a look at it from a sector perspective. And so I think a lot has changed, not just for Lightspeed, but also for the ecosystem. But for us, what we've been always laser focused on is how can we be early partners to the best entrepreneurs in any sector. And I'd say the geography piece has changed probably the most also in the last 10 years, where obviously originally we were focused very much, and I think most of the venture community was very focused on Silicon Valley entrepreneurship. I think we were somewhat early on the trend of starting to expand into other geographies. Our first geographies were China, India, and Israel, which we all opened between 12 and 14 years ago. Our first offices there, they were actually partners from the Silicon Valley office who went basically and moved to those countries and started those offices. And we kind of grew with those ecosystems. In the early days, I think there wasn't as much activity in some of those areas as there is now. But by being there early, we were fortunate that we were able to grow with these ecosystems and become some of the top investors, I think, in some of the better companies that came out of those geographies and continue to come out of those geographies. And so we've continued to lean into that. And over the last sort of 2 or 3 years, even since I've been here, I've opened up offices in London to focus more on the European opportunity. We started opening up offices in Southeast Asia, specifically in Singapore, to focus on sort of the broader region there. And I think that trend will continue. The way we've generally approached that is, do we find some great early investments of companies that we think can be sort of hallmark companies in those regions? An example of that is Grab Taxi, which we invested in about 3-4 years ago, which predated our opening of the office.
Ansaf, I think you got muted just last 5 seconds.
Somebody muted me, I think, but maybe I'm talking too long. So I think in that example, I was just saying that, we invested in Grab Taxi about 4 years ago. That allowed us to get a foot into the ground in the geography and then, learn some more, make some investments, and then ultimately open up an office. And so I think that trend will likely continue into geographies where we currently don't have a scope into, but the focus has always been that entrepreneurship is global and that the firm needs to be global in order to reach those opportunities.
That's fantastic. So the 2 things I picked on was, Lightspeed itself has changed so much in today's topic about how the global VC landscape is changing. You have that insider's perspective. So we'll come back to that. Yeah. And then the international piece is super interesting, I think. So I've paid a lot of attention to India, and Lightspeed has done. So done, like the B2B marketplaces, you were early there. So that's pretty exciting. I do want to talk first about, your background. The first time we met, the MBA at Harvard and working at Grab and RelateIQ, that all, kind of was expected, fit with what you're doing. But you also have an amazing public policy background, doing a master's in public policy at Harvard, and then being a public policy fellow for Senator Cory Booker. So you might as well have been entered politics. So what brought you to VC? Tell us a bit more of that story first.
Yeah. Thanks for asking. I guess some of my trends kind of go back to, I think, the way that I grew up. My dad, both my parents were born in Lahore, moved to Oregon in the early 80s. My dad's an engineer. My mom was a doctor turned social worker. And I think both of those sort of veins informed the rest of my life in many ways, sort of implicitly. I think I always had an interest in technology, and obviously growing up at a time when this technology boom is happening, you kind of get excited and immersed into that, and that was certainly the case growing up, even as a kid. But I also had this sort of thought that I wanted to make sure I had an impact on the world, and that your life needs to be focused not just on yourself, but creating an impact for others. And I think that stemmed a lot from a lot of the work that my mom did as a social worker. And so when I came to undergrad, I went to Stanford for undergrad, and I thought that the best way to do that was go to government. Like if you go work for the State Department or for a big bureaucracy that's focusing on aid, for instance, you can have a big lever to make change and impact, because it's the biggest business out there is government. And so that was my sort of hypothesis coming into school. And I think when I got to undergrad, I realized that back then entrepreneurship wasn't a cool thing at all, but there was these pockets of high energy, highly intelligent folks in undergrad who were focused on ideas, and many of those ideas were focused on impact. At the time, climate change, and which still is an issue, was high in focus. And Al Gore was talking about the inconvenient truth and things. And so we had a bunch of innovation happening in clean tech. I got sucked into that a little bit, and that was sort of my first foray into understanding that you can match technology with having an impact together. And it happened to be called entrepreneurship. And so that was the way that I got excited about this whole space. But when I graduated from school, I got some good advice of not going and starting a startup directly, but going and getting some experience. So I went and worked at McKinsey and Company, which is a management consulting firm in New York, where I spent almost 3 years focusing mostly on the big financial institutions, but also some work in the social sector, including in Pakistan, which was a great experience. And really, when I met the policy thing kind of came back, I got a chance to meet Cory Booker at a big event, and he's somebody who I tracked for a long time. He's just a politician who kind of walked the talk. And so I literally just went up to him before his speech and said, I've been a big fan, and this is what I do, and here's how I think I can be helpful. And that turned into a conversation of joining him. It was a great experience, but I think what I ultimately knew was my passion was to go back to the world of technology and startups. And that's why I decided to go back into working at startups, and then eventually led me back into venture. But honestly, I think the best opportunities in venture are the ones where you can have an impact by changing the end customer's life, and whether that's a consumer company or even a B2B company where the individual business user is engaging with your platform and it's making their life easier. I think all of those are ripple effects of having an impact. And so I've been able to at least convince myself that those threads kind of hang together in my current role as well.
Totally, I agree with that. I think if you look at the last 3-4 decades, venture is the most transformational force that we have seen across the world. And obviously, that can lead to more inequality in some cases with concentration of wealth, but it's also changed billions of lives for the better. And it's just phenomenal to have the opportunity to do that. So let's get into the meat of it. Like we've seen last couple of years, phenomenal changes in the world, first because of COVID, but the VC landscape itself. When the pandemic hit, it felt like things would slow down, but actually very quickly it was clear that no, it's just going to accelerate. And then we are seeing the crossover funds really come into venture. And on the other side, accelerators continue to assert their power, and then operators becoming investors. So there's just so much going on. Talk to us more about what your view is on that. How is it changing, and what are the changes that are especially relevant for Pakistani startups?
Yeah, it's an important and dynamic question. I mean, things are changing almost by the month. It feels like, and I think the last 2 years has been the biggest sort of upheaval of the way that venture investing is being done in private markets that we've ever seen. When I was graduating, VC was almost like a cottage industry that sat in Sand Hill, and was this mysterious office spaces. And now, almost every VC is a very public entity, and you can get access to them through Twitter and email, and everything is available. And obviously the long tail of the type of investors is increasing, as you mentioned. But you're right. I think, when the pandemic hit in 2020, the first reaction, I think, by most investors was to pause, right? I think it was at least a month, if not more, of just let's see what's happening. And right now we could be entering into an environment that could be a downturn environment, and we want to make sure that we can support our existing portfolio before making a lot of net new investments. That very quickly changed, I think, over the summer time frame, where we realized that technology was actually going to be an accelerated force during this pandemic. And I think the whole community kind of leaned into that, both entrepreneurs as well as investors. And I think that's created the last 2 years of just such an amazing boom and progress. I'd say what's been happening for a while in venture, regardless of that at a macro level, is that you're kind of having two barbell approaches to the way that investing is happening. You have platforms, which I'd say Lightspeed would be one of them, which are maybe fewer in number, but are large in scale. And by scale, I mean very much what I was talking about at the beginning of the call. We're multi-geography, multi-stage, multi-sector firms that are really focused on the full life cycle of a company. So if you want to start the company all the way to right before you IPO, you have a firm that can kind of guide you and be your capital partner through all of that. And I think those firms have certain strategies and economies of scale that lend them to be able to be really great partners for entrepreneurs, because they can pay for large portfolio teams that help those companies grow. They pay for things like marketing and a lot of other services that just a smaller fund wouldn't be able to support. On the flip side, I think the other exciting trend, in my opinion, is the rise of smaller firms and solo GPs. And you're a great example of one of them, where focusing on very specific strategies, specific either verticals, geographies, or niches, allow them to create really exciting personal opportunities for their fund, but also I think can be great partners for entrepreneurs. So I can give you a great example. Just my most recent deal, which we haven't announced yet, is in the fintech and prop tech space. We split that deal with another firm that's essentially hyper focused on just that specific vertical. And so I think sometimes combining a force like us, which is a more generalized platform with a lot of other services with a very specific focus from the VC side of the other partner, can create a great outcome for entrepreneurs. So the net beneficiary of all of this is the end entrepreneur, which I think is really exciting and really great. For that sort of smaller category, or I guess the other side of the barbell, I think many folks are pushing into new areas also, where the traditional sort of larger platforms just take a little bit longer to get to. And so if you think about geographies, that can be an edge for a lot of these smaller firms, where maybe Lightspeed will take a little bit longer to get to a new geography. Pakistan could be one example of that. But a smaller fund, for them, that could be an edge and an opportunity. And so I think they serve a great part in the ecosystem of actually pushing the envelope on innovation. And I think yourself and so many other firms who are focused on Pakistan are doing that by being sort of first movers and creating and showcasing the opportunity. And again, I think it's just a very great net benefit to all of us and the whole entrepreneurial ecosystem.
Fantastic. Yeah, I think I like the barbell analogy, and two very different approaches, but both important. So building on that, if there are Pakistan-focused funds and they wanted to partner with Lightspeed, what do they need to do? What are you looking for?
Entrepreneurs?
So let's say entrepreneurs directly, or local VCs, who have invested in startups here and they want to partner with Lightspeed.
Yeah. So I think the two answers to that. I think one is what is already happening, which I think is amazing, is that you've got, like I was mentioning, folks like yourself who are nodes on the ground in these geographies. And so if I take the example of even our approach in Southeast Asia, or some of the investments we've more recently made in LATAM, oftentimes we're looking for local partners who have the context, who have worked at and built scaled companies, who understand and can help with diligencing these markets. Because for many investors, I won't speak for myself, but who might not have a Pakistani context, for them to come and invest into Pakistan is a reasonably high hurdle rate. Many people in Silicon Valley might not even know exactly where Pakistan could be on a map, for instance, right? And so I think getting over that hurdle is important, and I think that's the role that a Pakistani fund can serve for many investors. I think the way that would tactically work is that the ecosystem that's being created from what I understand in Pakistan right now, is very much focused on that sort of seed and Series A investment piece. And I think the opportunity to partner with a firm like ours or other similar firms is to come in as some of that growth capital at the Series A, Series B, and even Series C stages to say, hey, now that you guys have done great work at helping prove out the initial concept and get to some level of scale, as you think about growth capital to be injected into the company, that's where I think a lot of the role that a Lightspeed, for instance, could play and partner with some of the local funds in Pakistan to be able to help accelerate that. Because I think the next level for what Pakistan should see this year and next year is all the great investment that went in last year. How do we up level that now to becoming growth stage companies? And I think for a lot of that, you'll need some more outside capital outside of the country to come in to help fuel that.
Absolutely. As is, I think most of the capital, 80% plus of it is coming from outside. But as the companies, grow, we need a lot more of that. But Pakistan had a phenomenal year. We ended up with 350 million plus in VC funding in 2021, more than all the prior years combined. So that's pretty exciting. When you look at, so we talked about stage a bit, but when it comes to sectors in, let's say, Pakistani market, what sectors would Lightspeed and you be most excited about?
Yeah, I'd say that, in much of our learnings from some of the other regions that we've been in, whether it was China or Southeast Asia or India, a lot of what occurred was, the first wave of innovation oftentimes is making the end consumer's life easier, right? And many of those companies, not always, but many times were analogies to things that we saw in other geographies, right? So Grab is a great example. Uber ride sharing generally was happening all over the world, certainly was happening in America. We believe that opportunity would exist and will exist in Southeast Asia similarly, right? And so it was a reasonably safe bet in the sense of understanding the customer pain point and what would be needed to achieve success there. And so we were able to make that type of investment. Similarly, if you think about things like food delivery, right? That would be another great example. Fintech, I think, is a huge opportunity in all these geos. It's something that I'm actively looking at across multiple geographies. All the same sort of pain points around access to money, investment opportunities, credit, both for direct to consumer and B2B, is huge opportunities in Pakistan and in a lot of these geographies. But I'd say if there was sort of a high level wrapper around all of this, it would be mostly consumer focused and mostly thinking about how do you create a lot of quick customer value in a place where really there's probably not a lot of competition, right? Like even in the early days of ride hailing in most of these places, certainly there were fast followers, but in the beginning, it was really just one or two companies who were focused on some of these opportunities. And I think what excites me about Pakistan is that if you pick any of those categories, whether it's fintech, food delivery, digital health, there's just very limited competition from incumbents that you're probably going after. So your competition is going to be mostly other startups that might get created at a similar time. And so from a investment perspective, I think those are really exciting areas. And I think the next many years will be probably focused on those consumer opportunities. What flipped in China and India over the last maybe 5 years or so is that now we're also seeing B2B opportunities where we're seeing SaaS companies emerge. We're seeing enterprise infrastructure companies focused both on their regional markets, but also selling to international markets as well. And so I think as the Pakistan ecosystem matures, it likely will go through maybe a similar process where the low-hanging fruit of so much consumer opportunity ahead of us in the next 5 years should be taken advantage of. And at some point, we'll see a flip likely into more B2B opportunities as well, given the depth of technical talent that exists in the country and what I think we can offer the world.
Great. So that's huge validation because the Pakistani market is exactly in those sectors. So it's very much consumer focused right now. And what's really exciting, I think the two things that are very exciting. So one, we can learn a lot from Indonesia and India and other markets. So we're kind of going straight at it versus making those errors that those ecosystem founders did early on. And then the second thing is that the incumbents in Pakistan are, quite not as strong, right? So you don't have the equivalent of Reliance here. So to your point of those category winners, early movers, who win the market big. So we're starting to see some of that, both on consumer side and fintech. And then hopefully, the second wave, we'll see more B2B player as well. So I see Kalsoom has a question which is related to it. So I'll just ask that. She's asking, what's the perfect stage for you to partner with local startups? And then if it's a bit later, Series A and beyond, then what's the best way startups can build an early relationship with you?
Got it. Yeah, one quick comment on the discussion we were just having on Pakistan and the sectors. The thing that I've noticed, and I think this is a lot of credence to you and others, Kulsum and other folks on this call, I'm sure, who have changed the narrative around Pakistan. I remember seeing a few companies even, before 3, 4, 5 years ago, who were starting in Pakistan. The natural tendency for investors was to compare it to India, right? I think, what is there a company like this in India, and maybe does the India context sort of apply here? I think the thing that's happened in the last 12 months, which is more unique, is that finally Pakistan is being treated as its own unique, as it should be, country in terms of the context, what could exist, what can't exist. And certainly there are learnings from Indonesia, India, and other regions, but the idea that the opportunity set is unique in Pakistan has become much more clear and evident, and is clear in the conversations that I'm even having with other investors. So I think that's the exciting flip that's a little bit less explicit, but I'm starting to hear that in some of the conversations that I'm having with other peers. So it's really exciting, I think, for the ecosystem to finally emerge and that narrative to be clear. To Kulsum's question, I think it was about entry point. Is that right?
Yeah.
Yeah, I say that, like I was mentioning.
So what stage is the best for Lightspeed?
Yeah, I was going to say that I think for a country or region like Pakistan, in general, our focus has been everything, like I mentioned, from seed to pre-IPO. But I think for some of the markets where we're getting our feet wet and starting to expand into, I think the area of focus would oftentimes probably be more on the sort of Series A, Series B side, where some of that early formation work and some of the work that I think our local partners like yourself and others can do will be very beneficial as we think about exposing, significantly more capital into a company and thinking about sort of the next growth stages of that company. And so I think as we think about new regions, generally what we've been focusing on has been sort of Series A, Series B, or sometimes even a growth investment to start to understand, learn, and really become good partners in that region, and then expand that over time into a much more multi-stage approach. So that's probably generally going to be our sweet spot for an entry point into the region.
That makes sense. And does it make sense for founders at seed stage to still, reach out and build another relationship, or do you rather wait to see some traction, and when they're ready to raise for that Series A, them reaching out at that point?
Yeah, I'd say that generally some traction is always helpful, because I think it actually makes the conversation a little bit more productive, and we can have more things to sort of point to and discuss and unpack and hopefully learn together. One of the best things to suss out from the entrepreneur side of an investor is use some of those conversations and actual data to see how this person will be a thought partner and a board partner for you in the future. So I generally enjoy those conversations, but we do also like to build relationships early. Even if we don't invest in a certain round, oftentimes we can come back and invest in the future round, and that happens all the time. And so there are conversations I have, whether it's at seed, even sometimes at Series A, Series B, where we'll come back and lead a growth round in. So it's almost never too early to reach out. But generally, in terms of having a productive conversation, and I think really diving into something, having some traction to point to and being able to unpack that together is the most helpful and productive.
Thanks, that's super helpful. YC recently announced a change in their standard deal. And if you look at the Pakistani context of that, we're starting to see more Pakistani startups going to YC in every batch. At the same time, you have a number of local funds at the seed level who have done a great job supporting these at the earliest stage. This is an interesting change where in some ways, it disadvantages the seed funds from being able to invest in YC companies. So curious to hear your opinion about, what drove YC to do that? What are the implications for YC, for founders, and for seed funds?
Yeah, look, I have a lot of respect for YC. I mean, I think what they've built over the last many years is super impressive and still extremely impactful and valuable for so many entrepreneurs in the ecosystem at large. I think just for, folks' knowledge on the call who may or may not be familiar, YC has traditionally offered a certain amount of money for a certain percentage, and that's been sort of standard for, I think, a good amount of time. The number of dollars has changed over time, but sort of a 7% ownership stake for a certain amount of money has basically been their way of operating for a while. What they changed recently is also an opportunity to invest an additional amount of money at the most favored nation, which is essentially the best terms of the next round, essentially. And so, without getting into too much of the nitty gritty, I'd say that I think there are some things that help the entrepreneur in a case where they might be struggling for some money. And I think in general, having more money for entrepreneurs is net always a good thing. And so I think that's what one piece of the YC offer now solves for, but also for them as a business and as an investment firm that I think creates a lot of value for their batch. They're also creating some upside opportunity for themselves to make sure that they can continue to invest money alongside all the companies, especially as they continue to grow. And given the high level of interest in their companies, in some ways, I think they deserve that opportunity to do that. Look, the effects on, like we were talking about, the venture ecosystem is changing almost every month, right, in terms of the dynamics and the way that we have to react. And I think there are some effects for folks who are focused on that sort of seed stage. I think what that will likely do is push some of those funding conversations to before YC. So if you are a YC company, you might raise a little bit of money from pre-seed and seed folks even before you start YC, because that will help protect some of the dilution effects that I think you're referencing that might have an impact on seed and pre-seed firms. So I think what would likely happen is some of those conversations will just get moved earlier and earlier. It used to be when YC started, everyone used to go to demo day and invest. Then it started happening that a few firms, a few companies would get investment during YC. And I think now it's just going to get pushed further and further earlier. So net, I think YC does a great benefit to the ecosystem. I think they were very early to many Pakistani startups as well. So like I know Tajir and other companies who came through YC even a few years ago, which was much earlier than a lot of traditional VCs were even looking to invest in Pakistan. So I think whatever YC does, they do it in a way that's usually very thoughtful for the entrepreneur and generally a good thing for the ecosystem, and everyone else will just adapt.
Makes sense. So one final question before we open to audience questions. How do you see the exit landscape changing globally, and how can Pakistani startups best position themselves for that?
Yeah, it's a really good, important question. I think that one of the knocks that many emerging markets from a tech perspective get are, is there an opportunity to exit? And I think a lot of that has changed in different ways over the last few years. One, I think you're seeing the rise of many regional winners, right? It used to just be China, US, maybe Europe, but now you've got, for instance, in Southeast Asia, many decacorns, public companies now like Grab, et cetera, who could be acquirers of companies that are adjacent in region to them. So it's not just reliance on a Alibaba for an acquisition. I think there are many more highly valued companies in the broader region within Asia that could be very acquisitive in the future. And so I think that's really exciting. And it's across multiple sectors. Now you've got Ant Financial, you've got obviously Grab, you had Alibaba. So the types of companies are expanding, and the type of interest in the end companies is going to expand because of that. I think the other thing that's changed is that, we've seen in geographies like even LATAM with Nubank more recently going public, where you've got markets that are just focused on one, or companies that are just focused on one market, like Brazil in the case of Nubank, becoming a massive company. So it's not even this old theory that you had to be multi-geography in some of these smaller countries to be able to create a big outcome, but you can actually have a big outcome out of focus on just one big country. And I think that'll be the case in Pakistan as we start to see some of these companies scale. You don't actually have to go into multiple geographies to become a big company. And I think that's really exciting for Pakistani companies to be laser focused on their end market and not have to too early start to think about expansion into other geographies. And so both the ability to be acquired as well as the ability to, I think, go public with just your focus on a single market has changed in the last 5 to 10 years. And I think that old paradigm of no exits and no acquisitions happening in emerging markets has kind of evaporated. And so I think that is not a question that I worry about as much anymore.
That's great. Yeah, in some ways, Pakistan having such a late start. India started, 2000s, early 2000s, Indonesia in 2009. In earnest, like we started picking up in 2019, but I think what we're benefiting from is that increased mobile penetration, increased acceptance of emerging markets from VC firms, but also this exits. And I think it's great that what we're seeing is while some startups are opportunistically expanding internationally, but a lot of them just want to stay focused. They're finding very, very large markets in the process. So it's great to hear your view on that. So questions from audience. So Abbas Hassan has a question for you. What is the biggest lesson you have learned as an investor?
That's a good question. I think the first thing that jumps to mind is that every company is unique. I think sometimes we all as investors are meeting a lot of companies and try to create frameworks to understand and digest, and that's all important in terms of interpreting data quickly and being able to make some of these decisions in real time. But fundamentally, every opportunity and every company is unique, and that not only relates to the actual investment decision, but also post-investment, as you think about giving thoughtful and good advice to an entrepreneur about their business, understanding and appreciating the fact that that these businesses, each of them are almost their own person, and making sure you treat them as such and not as sort of a broad generalization of a direct-to-consumer fintech company, for example. And so I think many folks, I've even been victim of that, where sometimes you create too many frameworks or overgeneralize as you think about some of these opportunities. But the reality is that every business is truly unique, and making sure you keep that in mind as you engage with these companies and these entrepreneurs.
That's great. And then a related question is, what key startup metrics do you look for, when investing? And I'm sure that's different by sector, but what would be the top things, that you can generalize across sectors that really get you excited to say yes?
Yeah, I'd say, I see this mistake often from entrepreneurs where, what they ask for, what they think about is there a bar that we hit? It used to be like $1 million ARR, for instance. If we hit that, will we get a Series A? Because that was sort of generalized advice that was floated around. And the reality is there's no sort of check mark from a metrics perspective that folks are looking for you to hit, where at that point you'll just automatically get funding. I think what the reality is what if there's one generalized sort of principle to think about is momentum, right? And so that momentum can look different for different companies, but what that usually looks like is high month over month, week over week, quarter over quarter growth from a revenue perspective, or a user growth perspective, or an engagement perspective. And it can even be on a small end, but because we're in the business of exponential growth, if you start to see that happening enough times, even if it's early, that's where a lot of investors will start paying attention and say, hey, clearly something is working here. Let's unpack this further. So if there was just one principle that kind of works across B2B, direct to consumer, everything, the number one thing I think generally to be focused on is what's working from a momentum perspective and why. And if you can answer those questions well as an entrepreneur to an investor, you'll definitely get some good engagement.
Awesome. And then a good segue is somebody's asking, what's the best way to reach a VC?
Yeah, look,
so
I
let's
think
say somebody wants to reach out to you, then they don't know you.
I'd say generally, look, I think it's cold emails certainly work, and like there are ways to get that kind of outreach and then get some reception from there. The best way to reach an investor, for better or for worse, is trying to either get a warm introduction if you've got somebody in connection, or catch their attention in a way, right? So there's folks who can, if you wrote a thoughtful blog post on something that's related to something that that investor cares about, or maybe your business just announced something brand new and it's relevant to that investor's sort of past experience or sector focus, trying to create ways to catch the investor's interest in a creative way that doesn't just say, hey, can I please have a meeting for 30 minutes? Generally is a better way to go about it. But again, the best way, especially for Pakistani focused startups, I think that's what, for better or for worse, like I was mentioning, a lot of VCs are looking for some level of pattern recognition, especially for new geographies where they don't have boots on the ground, they are looking for local nodes to help them guide them to some of the best opportunities. That's where, folks like yourself and others, I think, can serve as great, pathways to understand what's happening in the ecosystem. And so, for instance, an introduction from you or from another local VC is certainly, very high signal in terms of, hey, we should pay attention to something from here, versus a generic Gmail email from an entrepreneur in Pakistan. It's just hard for the average investor to sort of say, is this something that I should, pay attention to or not, especially if Pakistan is not yet fully in their focus area. So for the entrepreneurs out there, I would really encourage you to, ideally build nodes and relationships with folks who are in Pakistan who also have connectivity to Silicon Valley, because those pathways, I think, will likely be the easiest and most productive ways to get in front of VCs in Silicon Valley.
Yeah, definitely warm intros work much better. And then the bar for cold emails, you have to be really creative. The bar goes higher. And I'm surprised like how often people wouldn't look somebody up and find the common nodes on LinkedIn. But these days, we're all pretty densely connected. And I think like that's an important part of being the founder skill set, of figuring out whether it's for sales, VC, like finding these connections. So let's jump into valuations. Aalif had the question about, there is a lot of discussion around valuations recently. How do VCs assess valuation for startups? And maybe you can answer that for seed, where there isn't any metrics, and then, Series A and later where you do have some traction.
Yeah. Well, look, I'd say there's no sort of hard science to this, but the way that the general way to think about this is that, we're all, as early stage investors, focused on an outcome, whether that's an acquisition or an IPO. And so the way that we think about valuation expectations in the future is what's happening in the public markets, or what are some of the more recent acquisition multiples, and you can kind of work your way back from there. So inherently, most of the time, the valuations you're seeing at the early stage are some derivative of what's happening in the public markets, or what's happening, in the sort of M&A market. It's certainly delayed and lagged, but it's stemming from something, which is usually those certain multiples. And so, for instance, as multiples might contract in the near term of what we're seeing in the public markets right now, there might be a case where you could see some contraction happening, certainly at the growth stage and maybe even over time at the early stage. But I think what's changed in the last 2 years in the sort of calculus of most investors is that the end markets for all these businesses were much bigger than we all imagined even 5-10 years ago. And so the greed around getting into companies early has increased, because even if you make up a number, 30 posts or 50 posts, if that company becomes a $5 billion company, you're going to be a very happy person. And so the early stage valuations are probably where we see the most variability, and also the most, when you look at a company with no revenue getting a $30 or $50 million valuation, you might sort of scratch your head. But the thought behind that is because over time, if this company is successful, the opportunity at the tail end of this is going to be so large where the valuation today pays off. So that's sort of just from a framework perspective. I think very tactically, at the early stage, given the competition we've seen that we talked about earlier in this call over the last 2 years, valuations have also been pumped up because of that as well. So in addition to the market dynamics, you're seeing a very near-term effect of all the money in the system, which has resulted in much higher valuations than I've ever seen as an investor. And the net of all of that is that it's great for entrepreneurs. So if you're thinking about starting a company, this has been the best time in history to be able to start a company, get access to capital, and do it on amazing terms. If you look at some of the terms that Airbnb or Facebook or these companies got in the early days, you will almost laugh at what those terms were compared to what you can get today in the market.
Yeah, I think Uber's first round was 4 million posts. There's 1 million or 4 million posts. It's insane. And that wasn't that long ago, it was a decade ago, and in Silicon Valley. And now I think even in emerging markets, you're seeing, some very, very high valuations.
Yeah.
How do you think founders should stay disciplined? So in a market where, there's lots of investors, there's lots of demand, it's somewhat easier. It's never easy, but somewhat easier to raise this cash. How do they stay disciplined? Because at some point you have to then grow into these valuations and show that traction, even if you're getting a very good valuation at seed.
Yeah, honestly, this is the hardest thing, right? Because I think in a situation where money is abundant, money in some ways there's a laggard effect on, how you think about, if you had scarcity value around money and resources, you might make different decisions. And those decisions in an early stage startup generally can actually be beneficial because you're really laser focused on finding a productive engine to create your own revenue, right? And that's sort of the nut of the problem around the abundance of capital that exists today. I think in general, what I'm starting to hear from founders, which is exciting, is that I can raise a lot more money, but I'm actually choosing this amount of money, which is still a good cushion, but it's not the necessarily the best term sheet that I got offered or the most amount of money that I got offered. So I think there has been some awareness in the market around that, but generally I do counsel the founders that I work with, to really think through the plan around how much money do they actually need to reach their next milestone. Like the reason why you raise a Series A or a seed round or a Series D round is to get to a next set of milestones, then raise your next. Yeah. And I think if you can work yourself backward from that milestone, that's the best way to come up with the actual number you need versus the number that a VC is necessarily offering you. And so I think that's a very important thing, but it's a hard discussion to have when there's a lot of money being thrown at many founders. And so I think at the growth stage, where you found product market fit and now it's really about accelerating. Frankly, I think there's more flex there in terms of the amount of money you can raise because things are at least starting to clearly work and you can do more tests. But I think the danger almost is at more the early stage where you're still trying to find product market fit, but you might have too much money. And again, like I said, it creates that sort of scarcity value and decision issues that I referenced.
That's great. Thank you for that perspective. So another question, this is a good one. So from Abbas Hassan, he's asking about Lightspeed Scout program and whether there are any learnings from that would be useful for Pakistani startup ecosystem. And I'll add that, I don't believe there are any Scout programs. We have some, small angel syndicates, but definitely we have thought about it. So I'm also very interested in hearing your perspective on this.
Yeah, it's changed over the years. Original Scout program is very much focused on sort of individual partners working with maybe 2 or 3 of their connections who are deep nodes in certain communities or verticals to basically help with early stage scouting of companies. And there was a way that, we made that attractive for folks. Now, over the last sort of 2 years, we've created this new Scout program, which is, again, sort of on a similar vein of how do we get access to certain communities and opportunities that we might not see, but also focused on, underrepresented minorities and folks who generally don't have as much easy access to venture investment opportunities. And so really created a program around not just trying to do it for our own purposes around finding great companies, but also helping train a whole new generation of potential investors, especially folks from underrepresented backgrounds. And so I think the Scout program has been really amazing in terms of offering that value. But to the lessons that might be helpful for Pakistan, I think the biggest thing is that we saw this even in Southeast Asia, where as you start to see companies scale, like a Grab as an example, you start to see many folks start to spin off and then either create their own companies out of that, which is usually the most likely outcome, or sometimes even become investors out of that. And I think we're still early in the Pakistan evolution, but very easily I can see in a year, 2 years, 3 years, as companies scale and as people who are part of some of these scaling companies today decide to take a bet on themselves, or maybe want to think about being an investor. I think that's where the Scout program like platforms can be really helpful, because people who want to either start a company or join another company, but want to start investing in their friends and their network because that network has started to expand and has experience, Scouts can be really valuable there. To accelerate that growth, but also be valuable for firms like yourself who are looking to develop and build nodes into those communities that are now much more mature.
Yeah, we definitely saw early, and we need a lot more founders. We need a lot more investors. And in both cases, the overlap between money and skill, it's not a given. Like those are two independent things. So I feel it's a great way to get more people to start investing and train them on that. So thank you for that. Monis Rahman had a question on Twitter where he was asking about overlapping investments. So let's say VCs invest in a space, and then they make another investment in a very similar company in that space. What's your view on that? Is that unethical? Does that make sense in certain situations?
Yeah, look, I think generally we're in the service of entrepreneurs, right? And so I think the best thing to be doing is making sure that you're aligned with the entrepreneur that you're invested in and investing in, to make sure that there's hopefully not conflicts there or not issues there. I think what's changed from a geography perspective is that actually I think some of those things can be additive. If you invest in a B2B marketplace in India, and then you invest in a B2B marketplace in Pakistan, likely those could be actually additive experiences and knowledge sets that can actually be shared. And so at Lightspeed, given that we're a global platform, we actually use a lot of our expertise and knowledge in one geography to help some of our partners in other geographies think through investment opportunities. And oftentimes there are some analogies around what we can learn and share with each other to be more productive. And I think actually entrepreneurs really like that, where they can learn from the experience of their counterpart in another region. So we've actually seen that be pretty beneficial. And I think, the other piece is that some of these markets are so expansive now, not just from a geography perspective, but even within a sector. For instance, if you think about consumer finance as one example, there are obviously going to be opportunities around credit or debit or investing that will look different or have different segmentations around the way they are approaching their go-to-market or approaching their product. But at a high level, if you just categorized everything as an investing product or as a debit product, you'd probably not be able to invest in more than one company, which inhibits you. So I think the end markets for a lot of these big sectors are so big that it actually generally is more additive to have experience focused on one of those verticals for the end entrepreneur than to be overly cautious around thinking about doubling down in investments in a category.
Yeah, that makes sense. Adil Sayed had a question about
Hey, Aatif, you froze on my end. I don't know if that's a technical issue.
Yeah, he seems to have frozen.
I think he was asking a question on behalf of Adil.
I can ask the question
Yeah,
to keep the conversation going.
Yeah,
I was actually wondering if the limited partners of funds like Lightspeed have shown any interest or reaction to investing in Pakistan. And I'm thinking about like the long-term implications of like LP interest or skittishness around Pakistan and what that would mean for long-term investing.
Yeah. Look, I'll generalize it away from sort of from our use case, more generally from what I think is going to happen. I think that generally, investors are actually giving a significant amount of leeway to their funds in terms of the way they think about investing, right? Like ultimately, most funds have their strategy and a perspective around what's going to make them successful in a market, and obviously that's part of the pitch. But at that point, the execution piece really comes down to the fund to make that happen. So I think the generalized, if I was going to say, even from an average investor who maybe doesn't know a lot about Pakistan, so even if we take it away from LPs, but just think about funds who are maybe approaching Pakistan and thinking about the implications there, I think what's exciting is the narrative that I think has really emerged in the last year. And again, I give a lot of credit to people on this call and Aatif and folks who've made this happen. But the size of the country, young population, the smartphone penetration, the ability for that young population to grow into so many other different areas and spaces, the lack of competition from the incumbents, like there's so much high level attractiveness around that narrative that I think you can make a pretty strong case to any rational investor on why there's an exciting opportunity in Pakistan. I think what's the hurdle that likely will remain in some folks' head, and that I think any entrepreneur pitching a VC and any VC pitching an LP will probably have to talk through is, some of this stuff around pattern recognition, right? Like, what do we know about Pakistan? If you're an LP in the United States, or even if you're a VC in the United States who doesn't know much about exposure to Pakistan, has probably shaped a lot about the narrative that they've heard over the last 10 years in the news, right? So security issues or maybe this is something close and looks kind of like India, so maybe we should treat it like that. So there's a lot of these sort of biases that I think we're starting to make good headway around. But I think those are the natural biases that emerge when I think you talk to sort of a more average investor or potentially an LP. And I think, in Silicon Valley, success begets success, right? Like if you think about Latin America is a great example in the last few years where Nubank was an all-star company for a long time. They had great investors. They had a CEO who was US trained and worked in the US and went back to start a company. So it had all the ingredients of here's a hallmark company, yet LATAM investing for a while was not actually that hot until the last few years. And I think it took a few of these companies to get to some kind of escape velocity for then the rest of Silicon Valley and obviously their LP base to start saying, hey, this opportunity is truly happening and we need to be a part of it. And now it's some of the most competitive and valuation rich companies are coming out of LATAM. And so I think unfortunately part of that is more of just this bias around like, hey, there is a security issue in Pakistan. We don't know much about Pakistan. We can't travel to Pakistan easily. Like those are the hurdles that I think we have to continue to work around. But the high level narrative on Pakistan, I think is really exciting right now. And again, a lot of kudos to the people on this call who have, I think, helped shape that.
It's changing fast. I think that's the exciting part that, in the past when the startup flywheel hadn't really started, so you'll only get those negative news, right, in the US that would make the coverage in the startup and VC circles. But now that, you're having these funding rounds and from really, really good VCs coming up, even when there is an incident, and the security situation is way, way better now, it doesn't get that coverage, right? And I think the overall narrative has become very positive. And in some of these conversations, I feel now when you point to the fact that, in Mexico last year, I think 40 plus electoral candidates were murdered. It was a very unfortunate year. And in Pakistan, like nowhere near close to that. And despite that, Mexico's startup ecosystem flourishes. I think people get that, and that's an argument that works fairly well. So let's move to a very interesting question from Durrani about platforms like Pipe and Clearbank. They're disrupting traditional VC by providing a lot of funding to drive growth without dilution, and that's obviously attractive to founder. How do you see how much would they impact VC? Like, is that just limited, or do you think this will be really truly disruptive? And two, what do you think about potential of something like Pipe happening in Pakistan?
So on the first question, I think that I think entrepreneurs should always be exploring the best opportunity for financing of their company, full stop. And that could include things like Clearbank and Pipe and folks that help them create more less dilutive ways of fundraising if that fits their mold, and obviously in conversation with the board, et cetera. In general, what I found though is that especially at the early stages, but even at the growth stages where you would imagine Pipe, Clearbank, et cetera, probably taking more share away, is that founders are really looking for not just capital partners, but somebody who can be a thought partner on their business, right? And I think, again, that's probably the most true at the sort of seed, Series A, maybe Series B stages. But even at the growth stages, fortunately for us, for instance, we can point to so many examples of companies that we've been partners to at that stage who have IPO'd and exit. And if you're a founder, what you're really thinking about is, how do I get from step A to step B of an exit and an IPO? And if you've got an experience set, or you've got a network of experience and a platform of experience to offer from your firm, I think that there is actually still a very strong competitive advantage to continue to offer that service for a price. And I think what you're seeing in the market, given the way valuations have worked and the way ownership at the growth stages has changed, is that it's sort of hit a middle ground between that, where some discount is being applied to those growth checks from equity investors around Series C onwards. What used to be maybe a 15% ownership round is going to 10 or 5% at those growth stages. But yet it's not going to all the way to the other extreme of just sort of taking capital from a Clearbank or a Pipe either in most cases. So I think there's all these forces like we've been discussing that are changing literally every quarter to quarter around how venture is being operated. But I don't see them necessarily displacing the role of a traditional VC even in the growth stage.
Great. Talk to us a bit more about the regulations and what can the regulators do better to help startups, especially on the fintech side?
Yeah, look, I think regulation plays an important role in so much of technology, whether we see it or not. I think what we want to see the government or regulators in general doing is making sure they're not gatekeepers to innovation, right? So if you think about things like in fintech, if you think about licenses for digital banks, how do you make sure that there's enough opportunities for startups who want to offer new exciting products for end consumers or end businesses to have the opportunity to at least compete for that services? So the opportunity to do that shouldn't be gatekeep too much in terms of a number, but maybe more so from a requirement basis on making sure they're following certain laws and rules. Similar things like crypto, not to make a statement on whether crypto is good or bad for Pakistan, but generally it should be thoughtful policy around how do we make sure that innovation is not inhibited because of a broad rule around how we think about crypto, for example, in Pakistan. And we're struggling with some of these same conversations in the US, both when it comes to fintech licenses as well as crypto. So these aren't solved problems, but I think the core principle for regulators in Pakistan should be that it needs to be innovation forward because of the opportunity that I think it will not only create for end customers, but also the employment growth that's going to happen in so many of these sectors. We just don't want to shoot ourselves in the foot.
Couldn't agree more. So I'm going to end the final question from Babar Khan. He's asking, when are you writing your first check into Pakistan? You might know Babar.
Yeah, good question. Thanks, Babar. Yeah, it's a good question. Look, I think we're really excited about the opportunity to potentially expose an investment into Pakistan. I think for all the reasons I'm on this call and for the excitement that I think we have for not only what's been happening over the last 12 months, but the macro, which folks like Aatif and others have covered so well in terms of why this opportunity is so exciting in Pakistan today, is really enticing. And so, from a strategy perspective, we're very high concentrated investors when it comes to the way we think about partnering with companies. Each partner might make one or two sort of non-seed investments a year. And so the bar is high for the way we think about when we can get involved and the opportunity to get involved with the founder. But we're actively looking and talking to founders in Pakistan today, and excited to hopefully announce something in the future.
We're excited about that and hope that happens soon enough. Ansaf, thank you so much for taking the time. This was a wonderful conversation. I learned a lot. And thank you everyone for tuning in and such wonderful and interesting questions.
Yeah, thank you so much for hosting, Aatif, and Ali and Pak Launch. Thanks for having me and for all the great work everyone here is doing on changing this narrative and creating this opportunity for Pakistan.
Thank you all. Take care.
Awesome. Thank you.